Hey guys, yup, you guessed it. So today we're doing another gold video and how to identify fair value gaps on them and how to take trades on gold using fair value gaps. It's really simple. If you don't know how to identify fair value gaps or you don't even know what they are, I made another video on it. I'll link it down below so you guys can see it. But they're really very simple. First, let's just get into how I trade gold. So we're gonna go back in time and get like a good idea on what this is. Alright, so I'm gonna show you guys both bearish trends and bullish trends. This one would be a bearish trend. To be honest, I could have used this one, but honestly, it really doesn't matter. Like, see how tight this is. This just shows how like this works. Like, it doesn't matter what I use. It really does not matter what I use, honestly. Like, I'm gonna get my profit regardless. So, yeah, why not? Let's just use this. Like, it really honestly don't matter. You know what? Yeah, let's use this. Why not? Yeah, it really doesn't matter, honestly. But for the sake of the video, so you guys can get a good idea of what I'm doing for you guys. Yeah, so let's get to it. First and foremost, let's do this one first. What trend is this? Off with, like, just focus on what's in the box, right? What trend is this if you look at it? If you guess bullish, you're correct. If you guessed bearish for this one, you're correct. So let me focus on this first. If you want to be able to guess what trend this is, honestly, really simple. All this stuff is literally like what 5th grade level stuff. Like, if you pass the 5th grade, then this should be easy for you. So it's whatever's in this box that we're gonna do, right? So what we're looking for is a bullish trend, right? So let's just use this. Man. Yeah, so how do we identify that this is a bullish trend? So you're gonna go for the start of it. So let's say this one right here starts it, right? And this is the so it's the low. This is a low, right? And this is the high. In order for you to get the bullish trend, you need to get a low that breaks this this high right here. So did this is a high. Did this high break this? No. If you look at it, what do you see? Not really. But if you look at this one up here, right, it broke it. This one broke it. See? Because this one is higher than this. So this is the new high. Then what formed over here? A new low. A new higher low, right? So it just continues up like a zigzag, right? Forms another low here. Okay. I could just keep going. Like, this right here wouldn't be considered anything because it's just ranging. Nothing broke this high to be considered a high until after it came here. So yeah, but let's just focus on the box. So once that high got taken, right, this is the low, this is the high. Once that high got taken, once this low broke this high and formed this high, right, and came back down and formed this higher low, Then what happened after that? Right, after it formed this high low, what happened? This high low broke this high and formed this high, this new high. It's like a zigzag. It just does the same thing over and over again. Then this high came back down and formed this high low. Alright, so we're really focused on the box, so I'm not really worried about anything else. Alright, so that's how you know that it is a bullish trend. Okay, so what do we do next? Right, so what do we do next? Alright, so once this low broke this high and we know it's a bullish trend now we're gonna look for fair value gaps. Right, so what are fair value gaps? Right, fair value gaps are 1, 2, 3, identify 3 candles, and there's a gap between the first and the third candle here. So you're gonna use that. See, 1 here, 2, 3. The gap between the third and the first candle, that's a fair value gap. So you're just gonna identify fair value gaps everywhere that goes up. So 1, 2, 3. This is a bullish fair value gap. You know, so we're just gonna look for those with fair value gaps. I go more in depth on a different video to show you guys what fair value gaps are, but for the sake of the video, this is what we're doing. What is this? This is the final fair value gap that goes up. Right? 1, 2, 3. So, before it comes out of the square. Right? Now the square is just here for the video. We're just isolating all the other prices. We're isolating. We're only focused within the box just for the video. So, once we identify the trend, we identify the fair value gaps that's going up. Are we using this as a fair value gap? These red candles, 1, 2, 3. No, because that's a bearish fair value gap. We're not using that. We're only using bullish fair value gaps. So 1, 2, 3. As long as it's going up, we're using those. Any fair value gap that helps it goes up, that's what we're using it on. Okay. Next, what are we doing? So once we identify the fair value gaps, we are looking for time, right? So we're looking for 8 a.m. Eastern Standard Time and 11 a.m. Eastern Standard Time. That's when we're looking for entries, right? So we're gonna wait for price to get into this fair value gap. Notice how once this low broke this high here, we see the fair value gap form. We're waiting for time, which is 8 a.m. Eastern Standard Time. 8 a.m. Eastern Standard Time till 11 a.m. Eastern Standard Time. Right, so we're waiting for that. 17, 1, 8. This is 9. This right here is 9 a.m. Notice how this green candle right here came down into this fair value gap. So you could enter this if you wanted to at 9 a.m. Eastern Standard Time, and your stop loss will be below. Your stop loss will be below the initial one, which is this one right here. Right, there you're waiting again. 9 a.m. We see that this 9 a.m. candle came all the way down, right, and took you out. So you would have lost. Yeah, this would have been your first loss, but that's fine. You can't win them all. Alright. So you would have got taken out here. Now this fair value gap looks like it's still holding. Why? Because this high is still holding and it hasn't taken out this low here. So remember, if you remember, I didn't do it yet, but that's what the I'm gonna show you in the bearish trend. But as long as this high over here, didn't take out this low here, it is still considered a bullish trend, right? So this fair value gap failed in this situation because you got taken out. Look, 1, 2, yeah, you got taken out here, and that's perfectly fine. Sometimes news comes in too strong and pushes price all the way down, you know. But if you look closely, right, there was another fair value gap here, right? Look, 1, 2, 3. Alright, so you could have waited for price to come in here. So even though you got taken out here, right, that's fine. It happens. But you would have been able to enter this one when they went into this fair value gap right here at 9 a.m. Eastern Standard Time. So then your stop loss will go below. It will go below the first candle that started the fair value gap, which is this one right here. 1, 2, 3. So your stop loss will be below here. Right. So you would enter at 9 a.m. here, and you would wait. So you would have lost one and then entered another one and then waited. So you're waiting for another entry. Look, 9 a.m. again. So that's the second entry you would have entered again. So you would have got 2 entries at this fair value gap. So now you're 2 and 3, right? So you're waiting. You could go for 1 or 2, 1 or 3, but you could hold. You're waiting again. See price take off. You're waiting. All right. Another fair value gap formed around here. And what are we doing? We're waiting for price to come back down into this before we take it. Right? So we're waiting. Price never came down here, just left without you. You're waiting. Look, another fair value got formed here, but guess what? Right here. So we take it. Look, 1, 2, 3. Right? 1, 2, 3. So you see the 9 a.m. So yeah, it went into it. So you would probably enter this, right? And stop loss go below the first candle, and you can see that you got taken out, which happens. Like you're not gonna win every single trade, okay? So now you're what, 2 and 2. So you would have lost 2. You're like 50% so far for this week. Okay, you got taken out. You're still holding. Now, if you still holding these trades, you're still good, you know. You see price coming back down. Now, some of you guys are gonna switch over and decide to sell, but again, that's not a good idea. Why? Because this higher low that took out this higher high here and formed this high, this higher low is still holding. So even when it pulled back down, this high never took out this higher low, so it's still an uptrend. So what are you gonna do? You look for another fair value gap that you missed, which is this one down here. See that? Remember that fair value gap you drew? Yep. Price came back down here. Look at what time it did that. 9 a.m. Okay, and then guess what? You would enter. Stop loss will be below the first candle, which is right here. Okay, give it space, you know, just to give it some space. And you would hold. Look, and if you held, price kept going. But if you held, price kept going, you know. But yeah, that's the gist of it. You keep holding, and that would have been 3 out of 2. So you would have right now your trade would be 3 out of 5 for this bullish trend. And that's perfectly fine. You know, that's a good win rate. Yeah. So just for the sake of the video. So yeah, within this, so you would have took 5 trades, right? You would have lost 2, but 1, 3. So you would have been 3/5 this week, right? And if you kept holding, right, you would be deep in profit, honestly, right? So that's a good win rate for this week for this bullish trend. Next we can do the same thing for a bearish trend, right? How do we know that it's a bearish trend? For those of you who are more seasoned, you would understand that it's the initial high.
Somebody check out first floor pod 7 and 8. Hydro system is running. Supervisor is in.
This high.
Copy that, Jason.
This high was formed right,
Showing lower.
and it took out this right here. Sorry about that.
Hey, were you now seeing 2 troubles? Are you seeing the in and then the out?
Okay, sorry about that. So this is what the high that was formed here. This high was formed. Then this high low got taken by this high. Formed this high low. Excuse me, formed this high low, came back down. You're not putting it down here. Why? Because this high low right here, this high low didn't take out this lower, this lower high didn't take out this lower low. It just consolidated. Alright, sorry about that. Yeah, so this high was took out this high low, formed this lower low. Then this lower low went up, made a lower high. This lower high never took out this higher, this lower low. It just kept consolidating. Then this consolidation never took out this high over here. It just kept consolidating. It dropped finally and made a new lower low around here. Okay, before it decided after beyond the rectangle to decide to continue back up. But this is how you identify the downtrend. Now high low, that's the high low, lower low, high low, lower low. Oops, excuse me, messed up here. Meant to put lower high. Okay, so this high took out this higher low, formed the lower low, went up, made a lower high, came back down, took out this lower low, formed the new lower low. Okay, so we'll only focus on what's in this rectangle. So you're gonna put bearish trend, and then you're gonna put 8 a.m. Eastern to 11 a.m. Eastern. Now you're only looking for entries again at 8 a.m. Eastern to 11 a.m. Eastern. You're not worried about anything outside of those. Those are the best entries. So once this high took out this high low, formed the lower low, now we're looking for fair value gaps to continue it downhill. Okay. So there's a fair value gap here. Right. We're just looking for downtrend fair value gaps. You can't really use this one. Yeah, you can't use this one. No, there's one here. Okay. So this looked like this was really a good 2 weeks, because you wouldn't have found any entries. See, this fair value gap got invalidated, went up. This is only if you're trending on the 4 hour. If you went on a lower time frame, you would be able to probably see some fair value gaps, but yeah, in this situation, it looks like it wouldn't have been you just wouldn't have been able to see any good trades, and that's perfectly fine. You can't see every good trade every time, but let's see if we can find a more. Let's look at this one. Let's just focus on this one itself. I'm pretty sure you guys already have a good understanding of the trend, so I'm not gonna really do much of it to save time on the other side. Alright, I'm just gonna carry over the bearish trend. So you guys already have an understanding of this being a bearish trend, like we did here. This high took out this low. Yeah, like, excuse me. This high took out this low, formed this high. Came down, came down, came down, came down, came down. You know. So just to give you guys an example, a little tiny example, so you guys know what I'm talking about. No. That's the thing about gold, Ethereum, cryptos, all that stuff. They so volatile. So sometimes you're not gonna get a good entry. You're not gonna find a good entry, and that's perfectly fine. You know, like that just teaches you patience. You know, so we're going down. That's how you know it's a bearish trend. This high took out this low, formed this low, went up, formed the lower high, broke the lower low, came down, formed the lower low, lower high. You know, that's how we know it's going downhill. So now we identify fair value gaps. Right, 1, 2, 3. That's a fair value gap right there. You know, 1, 2, 3. That's another fair value gap right there. 1, 2, 3. That's a fair value gap right there. 1, 2, 3. That's another fair value gap right here. 1, 2, 3. That's another fair value gap right there. 1, 2, 3. That's another fair value gap down here. 1, 2, 3. That's another fair value gap right there. Now, why didn't I use this 1, 2, 3 one? Because you see the wicks, 1, then 3 wicks, they touch, so that's not a fair value gap. Next up, once that's done, we identify fair value gaps. Same thing we did with the bullish trend and the previous bearish trend that I showed you guys. Is we gotta see if we can find entries during time. So there's a fair value gap here. We're waiting for price to get into the fair value gap, which it did. But we're waiting for 8 a.m. Eastern, 10 a.m., 9 a.m., and 11 a.m. Eastern. Look, right here, 9 a.m. Eastern. So what are we doing? You guessed it. Looks like a good trade. We're gonna enter. Stop loss goes above the first initial start of the which is this one right here. Stop loss goes above that first candle, which starts the fair value gap for safety reasons and for basically some time. So that way, because price can sometimes go up here and take you out before it goes back down. So if you have it above that first candle, if you have it above that first candle here, it gives you room. It gives price room to play around. This would have been the first trade you would have been profitable. You know, if we look deep down, this is low key another. Look, if I zoom in, make this a little bit more tiny. If I zoom in, you can see that this was another fair value gap right here. See, first candle, second candle, third candle, fair value gap. The third and the first never touched, so that's a fair value gap right there. Alright, you can see, alright, this would have been the first entry. So you would basically wait for price to either come back up into that fair value gap or wait for price to come into this fair value gap. So you're waiting. Look, 9 o'clock right here. This is 9 o'clock right here. So what do? Another entry. right? And where would stop loss be? Above the first candle. This is the first candle right here, right? Price will be, since this second candle took out this first candle, yo, stop loss will be above that. So look, price still playing around, never went back up here to take you out. So that would have been 2 entries you entered at 9 o'clock. You're waiting again to see if you can find another fair value gap. None here. See price coming back up. Don't be scared. Fair value gap still holding. Everything is still holding. There's no need for you to be scared when you see a pullback, right? The downtrend is still in motion. You know, nothing got broken to the upside yet. No lower highs got broken to go up. Everything's still going down. Fair value gap is still holding here. And what are you looking for? Yep, another entry. Do you see 9 o'clock? 9 o'clock right here. That's a what? So that would have been a 1, 2. That would have been the third entry right here. Right here at 9 a.m. Another entry right here. That's the third entry, and you're holding again to down there. You're waiting. There's a fair value gap up here. You could have used that if you wanted to, but you're still waiting. You're waiting. Another fair value gap forms right here. You're still in profit, 3 in profit. So let me actually write that down. So you would have took 3 trades and be up. So you would have been 100% up right now. Right now, a new fair value gap formed here. You're waiting for price to get up to there and touch it. Look, this fair value gap formed. This is the third candle. You're not using the third candle, so you're just gonna wait. If price don't come back into that fair value gap, you're just gonna wait. Look, price came back up. Look, it's 9 a.m. You see it right here. Price went up. If you decided to, you could have just entered after the 9 a.m. candle close here. Stop loss again above the first candle. Oh snap. Above the first candle, which is up here. Yeah, the stop loss a little huge. So you don't have to take this trade if you can't handle that, you know, pull. But again, if you hold, look what happens. A lot of entries. So that would have been, if you decided to enter, that would have been 4 out of 4. Now 100 trades you're up. You know, you're waiting again. If you don't want to enter that, that's fine. You could also, like, you know, ignore it and win again for a different fair value gap to form to take it. You know, like, no, I'm not a fan, and sometimes I'm not really gonna be able to take this trade. But look, this is another. If I move this, if you look closely, there's another fair value gap that formed here. So if you wanted to, you can have it out. Say you didn't want to take that long stop loss trade, you could ignore it and wait for another entry here. Look, excuse me, sorry about that. And wait for, look, 9 a.m. right here. This entry here. Wait for the next day on Friday for it to happen. Stop loss will be above the first candle right here. This is more time to stop loss. First candle right here, you would hold. So if you was like me and you decided to, you know, enter these, that's 5. So now you're up 100%. Right now, look, another fair value got formed here. We're waiting for price to come back in here during time. Price never came back here during time, so we're just gonna ignore it. Since price never came back up to this fair value gap, we're gonna ignore it. We'll make another fair value gap. Look, price didn't really come up into this fair value gap per se, so we would ignore it. Another fair value gap formed here. Waiting for price to get up in there. Look, price went up in here. This is the 6th entry. Fair value gap is formed here. 9 a.m. Push it above the first initial candle, which is this one right here. 1, 2, 3. Stop loss above here. We would hold again. So you would really be in profit. You can make another fair value gap here. As you can see, price never came back up here. So you would be good. This high, as you can see, this low took out this high over here. So at that point, you would already be out the trade. But guess what? You would be up. You would have took 6 trades, honestly, within this whole entire week or this whole entire month. And You would have been, if you did do it, you would have been, this whole week you would have been 100% up. You wouldn't have lost any trade if you took it. You would have held it. As long as you kept moving your stop loss or taking profit, you would have been good, you know. So even though you didn't catch any trades here, that's perfectly fine. Because if you really knew how to enter trades, you would have entered. You would have found some here, or you would have waited for another bearish trend to happen, and you would have been 100% up. So if you only took these two trades, the first bullish trade and this second bearish trend, ignore this one, you would be in total 9 out of 11.
Hey Dave, as soon as that pump kicks on,
So you would have been 80% win rate. Yep. So you would have been 80% on gold. As long as you ignore bad entries and just take good entries, you would have been pretty good. Alright guys, see you guys in the next video. If you want to check out other videos of me trading other pairs, other cryptos using the same method, you can watch my other videos and check out my other playlists. Alright, thank you.